Hey everybody, hey traders, Chris Pulver here. Welcome back to the Pulver Report, where we trade to be profitable, not perfect. My topic today is a really important one, and you can do this right alongside me. I'm going to show you how I plan to turn $100,000 into over $1 million using stocks, using cryptos, and using Forex. All that today and more on the Pulver Report. So taking $100,000 and turning it into $1 million. Do I think it's realistic? I do, and I'm going to break it down and show you how. Now, why is this topic important? It's not just heading into the new trading year, but it's for investing in general. I could be a one-trick pony, a one-dimensional trader and just trade Forex, just trade stocks, or go all in on cryptos. But with a combination of hard work, active management, following sentiment, a little bit of luck and optimism, and some patience, I believe that we could turn this 100K into $1 million. Now, I'm not taking this 100K and planning on this being $1 million in the next 1 year. If you want that information, you might want to check out the NFTs in the metaverse, and good luck flipping them in an arbitrary market, all right? Now, what I'm talking about is real trading and real evidence that I believe is very doable without taking an insane amount of risk and getting super lucky, all right? I don't trade to get lucky. So let's start with the $100,000 allocation, and we'll break it down this way. I'm gonna put $50,000 in stocks. I'm gonna put $25,000 in Forex. I'm gonna put $25,000 in cryptos. So I'd like to begin by talking about what is the hottest, the trendiest, and perhaps the most asymmetrical trade in our lifetime, that is cryptocurrencies. Now, as I said from the beginning, you have to be willing to lose everything with cryptos. You know the risk, and that is what the big appeal is if you know the risk and you're willing to let that go, the potential growth and upside is phenomenal. Now, my forecast is nothing new. I'm just going along the lines. Let's be optimistic and say that Bitcoin does in fact hit $1 million in the next 5 to 10 years. The current spot price of Bitcoin is $47,000. Let's round up and say it's just 50K. Now, if Bitcoin goes to $1 million, that is a 20x return, or 2,000%. I will say that again, 2,000%. If I'm allocating $25,000 of my portfolio, and let's just keep it simple with Bitcoin, my 25K at a 20x return is now worth $500,000. Now, that's what makes crypto so incredibly attractive. A complete calculated risk can potentially pay off big time and dwarf all of your other returns. Now, I know this begs the question, Chris, why don't you just put $100,000 in cryptos and get that 20x return and turn it into $2 million? The answer for me is simple. It's not a guarantee, all right? If I went all in on crypto and I lost 100K, that's it. I got to start all over. So at least a small calculated risk, I can still take the remaining $75,000 in stocks and in Forex, and I can work them, right? I can still work my stock portfolio and work my Forex portfolio and generate the returns to ultimately get back to $100,000 and continue to grow. So before we move on to the next asset class, let me talk about something very important with the narrative and the sentiment out there for 2022. It's going to be a really important year to see what moves are made by central banks, all right? And certainly with respect to monetary policy and inflation. In 2020, with the response to COVID, it was a race to the bottom. 2021, we started to see the spectrum change. You've got dovish, you've got neutral, you have hawkish central banks. You're talking about taking action, talking about tapering, showing optimism in a post-COVID economic recovery. But as 2021 comes to a close, I think the central banks have now realigned behind the US Fed. And the Fed's going to play the leader in 2022. What the Fed does will likely see other central banks fall in line. They have been consistent and calculated with their statements. Tapering is a reality, and raising rates is likely going to happen. Now, we're seeing inflation measures at 40-year highs. What the Fed wants is full employment and 2% inflation. And what the Fed is actually dealing with is the Great Resignation, a growing gig economy, a labor shortage, and 6 to 8% inflation, real inflation. So the Fed is trying to calm the market's nerves, but I think the Fed is going to be a huge party pooper when cheap cash, tons of borrowing, excess liquidity in the global economy is going to dry up. In other words, reality might be quite sobering for the stock markets in the near term, but it should happen, and the Fed is either going to rip off the bandage and get it over with, or it's going to slowly drip out the narrative with a timeline so the markets can prepare everybody and prepare all the bottom lines for what's to come. So with all this coming to a head, we need to be prepared for a little tantrum, a little spasm in the markets. This is another reason it's nice to have cash at the ready and buy high quality stocks. I'm looking for stocks that have little to no debt, have a 3 to 5 year growth outlook, have cash and runway for years, and buy companies that are resilient, well known, and you could easily and confidently say that you would own the stock for the next 5 or 10 years because it is a strong company. So this leads me into my first chunk of stocks I want to own. FANG stocks. I do think that FANG stocks will continue to do well because they are massive. Apple, Amazon, Microsoft, Google, Facebook, those stocks alone make up over $7 trillion in market cap. So FANG stocks are either the complete house of cards for an over-concentrated stock market, or they are now the new safe haven with massive clout and continued optimism, and they run the world, so I'm not going to fight it. Okay, so let's get into the breakdown here. I've got $50,000 for my stock portfolio. I'm going to take the primary FANG stocks and go to the top 10 weighted stocks. So of 50K, I have 10 stocks. That means I'm looking to allocate $5,000 per stock. Now, here is the list. If you're interested right now, the top market cap, number 1 through 10 in the index weighted stocks right now. You have Apple, Microsoft, Amazon, Facebook. You have Alphabet Class A, which is GOOGL. You have Alphabet Class C, which is GOOG. You have Tesla, Nvidia, Berkshire Hathaway Class B, and JP Morgan. Now, when I look closer at the numbers, since 2009, the average return for those top 10 stocks, or the top 10 largest stocks in the market, was 57.3%. Now, this outperforms the S&P, the Dow Jones, and the NASDAQ significantly, which from 2009 to present averaged 14%, shy of 12%, and just over 20% respectively. Now, I get it. There's so much concentration in these 10 stocks, but this is a list of companies that are not going anywhere. They have the cash to squash the competition. They continue to be leaders in the respective industries. They have the technology and the innovation to influence the world. Now, granted, the top 10 by weight may change with some massive gains. You might have like the stock that's now 15th or 20th that has this massive year and it becomes one of the top 10 stocks. That's okay. We can adjust our portfolio accordingly. But let's start with this list right now, the top 10 weighted stocks. Now, do I dump 50K all at once? Do I take my $5,000 January 1 of 2022 and throw it all in? No, I'm going to dollar cost average. Now, we have 10 stocks. We're willing to invest $50,000 in those 10 stocks, so that's $5,000 each. Now, let's say that we're going to dollar cost average over a 2-year period. All I have to do is invest $208 per month per stock, and it doesn't matter where price is at. Dollar cost averaging doesn't matter if it's at a low price, at a high price. I'm going to space it out over 2 years, and that would be my 50K allocation. The fact is now that most brokers offer fractional shares, so it's pretty straightforward. You can just go in around the first of every month and add to these positions with a certain dollar amount. Dollar cost averaging makes investing simpler. We don't have to time the market perfectly, right? We don't have to pick a top or pick a bottom. We don't have to time the market. If we're investing and it happens to be near a high or near a peak, we're spacing out our capital over months and months and months. If we're near a bottom and things are looking really bad, we're not trying to catch a falling knife that could get worse, and we're not taking a large bet at one particular spot. Okay, we're planning on the cream to rise to the top, and this group will continue to be one of our portfolio bellwethers. We will see this portfolio group do pretty well. Now, after an unprecedented stretch in stocks post-2008, I think that this is a pretty straightforward approach to participate without getting caught at the highs and be able to round out some of those lows on substantial corrections and pullbacks, which I do think are going to happen. Now, by doing this, what can we expect? Of the 57.3% returns we've had since 2009 on this top 10 group, I'm going to cut that in half, okay? I'm going to say that this group conservatively will collectively produce 28.65% gains over the next 5 to 10 years. So our $50,000 investment, dollar cost averaging in chunks over 2 years with conservative annual gains. Again, I'm cutting it in half with what the group has already proven to do. This will take our $50,000 allocation, all right, our stock portfolio, and in 5 years, it's $176,000. In 10 years, it's a staggering $621,000. So if we're patient for 5 or 10 years, our stock portfolio could be sitting pretty, right? And all we have to do is give ourselves a couple of years to dollar cost average into the top 10 weighted stocks, and it's a pretty impressive portfolio. Now, after 5 years in cryptos, projecting that Bitcoin reaches a value of $1 million, and 5 to 10 years in stocks with compounding gains on the top 10 weighted stocks, our portfolio is now well over $1 million. Okay, we have $500,000 in cryptos if Bitcoin hits $1 million, and we have $621,000 in stocks. That's only in 2 asset classes. We haven't even talked about Forex trading yet. So let's add the final component. Forex is a trader's market. It's the land of currencies. It's watching risk on versus risk off trading. We trade up, we trade down, we trade sideways, and I generate monthly income. All right, the way that I trade, I like to build positions on higher time frames. I like to go after big profit chunks. And for me, my best year in Forex has been well over 100%. My annual return, my average annual return is around 17%. The There are some very strong correlations between the stock market and the Forex market, but you can be way more nimble in trading Forex. If we have the stock market rallying in a bull market, then we can buy the Aussie, we can buy the New Zealand dollar, the Great British Pound, the Canadian dollar. We can trade those against the dollar, the Japanese yen, and the Swiss. Now, if the stock market is falling, if it's tanking, if it's risk off, then we want to be long the JPY, we want to be long the Swiss franc, long the dollar, and trade those against the Aussie, New Zealand, pound, and CAD. Now, I trade Forex with positions. I also deploy robots, right? I trade robots for certain environments. It is a lot of work. It is a lot of management. It's a lot of supervision, but it's a great diversifier to hedge and offset any type of unsavory returns in stocks. If I'm sitting on deep drawdowns or corrections in the stock market as I dollar cost average, I have to wait out those returns to get them to new highs. But in Forex, I can actively take profit, I can actively trade, and whether it's up, down, or sideways, I'm looking at levels that I can generate income using Forex. So trading Forex is a nice way for me to take low risk, high reward, still generate consistent returns, and not have to be completely correlated with the overall markets trying to go up and trying to go higher. And if I take that $25,000 allocation in Forex, let's say that I can produce 20% a year. Let's compound that at 5 years, 20% returns. The Forex account will have a balance of just over $62,000. And at 10 years, that $25,000 Forex account is now just under $155,000. So now it's time to put the entire portfolio together. Again, we're looking at cryptos this way. If Bitcoin alone hits $1 million over the next 5 or 10 years, you have taken a little chunk, a calculated risk with that portfolio, and you're seeing an incredible, nearly unbelievable return. The asymmetrical trade appeal to Bitcoin is very real, and with more widespread adoption and acceptance, I do think that this is a calculated risk that I'm willing to take, but I'm not all in just in case, okay? If I keep my stock portfolio invested for 5 years, my balance is $175,000 in stocks. If I keep it invested for 10 years, my balance is $620,000. That's a massive difference by just giving yourself a little bit more time, and it shows the power of compounding gains. And you take that with Forex, actively trading, staying nimble and diversified. 5 years, I'm at 62 grand, and at 10 years, I'm at $155,000. So let's give ourselves 10 years, okay? Our portfolio totals, and again, I'm trying to point out that these are conservative and pretty realistic projections. At 5 years, our $100,000 portfolio between cryptos, stocks, and Forex is going to be sitting around $737,000. And at 10 years, our balance with cryptos, stocks, and Forex, $1.275 million. And for the 10-year projection, I'm keeping the Bitcoin value at just $1 million. That's the cap. So if Bitcoin goes to $2 to $5 to $10 million, that is a big pile of gravy, pile of schmeckles, and cryptos have made tons of investors very, very happy. So can I do it? Absolutely. Do I think 5 or 10 years is appropriate for this 10x return? I do. I actually did this whole projection based on real data, projections, and what I think are realistic expectations. So as I wrap this up for today, I just want to ask you, did I make this example super complicated, or was it pretty straightforward? I'm taking literally one cryptocurrency, Bitcoin. And so if you're out there like, well, I trade Ethereum and I trade Litecoin and I trade this coin, fine. If Bitcoin goes to $1 million, pretty much every crypto most likely will appreciate. Now, I don't know if it's as simple as a 20x return, but I'm just saying, look, if you started with Bitcoin and said, that's the gold standard, Bitcoin's trading at 50K or lower right now. So that is a 20x return. I love the potential with a small calculated risk to be a 20x return. Now, I'm not going all in on just Bitcoin because I have to have some other working capital just in case it doesn't pan out. All right, I know that I can trade stocks and options. I know that I can trade Forex and I can generate returns. And if I had $75,000 to work the capital like I've been trading for the last 15, 20 years, I know that I can take 75K that's left of that 100K portfolio if cryptos goes bust, and I can still generate returns. Now, it might take longer to take 75K and turn it into $1 million, but a stock portfolio, I just said, for $50,000, 10 years at a conservative return with those top 10 weighted stocks, you're looking at a $600,000+ portfolio in 10 years. That's not nothing. Like, that's a great chunk of profit, and that's amazing returns, the power of compounding gains. So after watching today's video, I hope this does at least one thing, and that's just get you thinking about investing. All right, you've got to start somewhere. This is the best time to be a trader. I don't care if you're a beginner. I don't care if you've been trading for 10, 20 years. You got to start somewhere. You got to improve. We got to get better. These are mechanisms that we can use to become wealthier. All right, we can grow. We can gain. This is good. Doesn't matter what the markets do. We can find ways to generate returns. Now, if $100,000 is unrealistic, okay, then scale it down. Can you take $1,000 today and turn it into 10? Can you take $10,000 and turn it into 100? It's the same process. And I've said this for years to all the traders and followers out there, process equals profits. Be sure to leave me a comment on today's breakdown and let me know what you think. We're keeping the portfolio very simple. I'm taking Bitcoin for cryptos, the top 10 weighted stocks and dollar cost averaging over 2 years, and grinding out returns between position trading and investing in Forex with robot trading to stay nimble, overall be well diversified in these multi-asset classes. Now, if you'd like to take the journey with me, I'd love to have you join me live and tune into more live Pulver Report sessions on Mondays and Fridays, and even consider trading live with me in my trading rooms. I run the Flex Trading Room and the Equities On Demand Trading Room, where I usually am charging $2.99 per month, and right now I'm running a special discount for the holiday season. You can trade with me for $27 for the first month and dive right in and see what it's like to do this every single day. I will say this, it's not a bad gig. All right, everybody, that will do it for today's Pulver Report session. Let's take $100,000 into $1 million in a low-risk, realistic reward type scenario. I look forward to seeing your progress as well as my own in the coming years, and let's face the markets head on with whatever comes our way. Now, if you do me a quick favor, kindly like today's video and comment, and that helps my channel a ton. Thank you so much for watching. I'll see you in the live sessions, see you in the markets. Happy trading and lots of profits.